Hello, everyone. The use of Pyinvesting.com would be able to simplify the process of screening and backtesting a multi-factor strategy. So in the ERM program, I'm going to demonstrate to you the use of Pyinvesting to backtest as well as screen a strategy that consists of three factors. This particular strategy would combine a low price to earnings ratio. It would combine it with high profit margin growth. And finally, it would, on top of this, look at stocks with the highest momentum or 180-day relative strength. All right. So let's do this. We will first conduct a screen of Singapore stocks, and to make it interesting, we will just limit this screen to counters in the Straits Times index. All right, so that when we perform the screening, it will be done in a quick manner. All right, and when we click find stocks, the 30 stocks belonging to the STI would then appear. All right, so let's move on to a backtest and ignore the screen. And once we arrive at this backtest, you will find that all the STI counters have already been included in the screen. All right, so what we're going to do is we're going to set all the weights to 0. Okay, and what we will do is we will put about 33% into our low PE strategy. All right, and then this will be our value component of this strategy. Right, and then we will move on to our growth strategy that says profit growth, and let's devote another 33% into selecting stocks with the highest profit growth. And finally, we are looking at stocks with the highest momentum, and to round it up to 100, let's put 34% into a high relative strength strategy. Okay, now at this point on the back end, I would like to remind students of the ERM program that at the back end is basically an exercise that would basically calculate the Z score of these three factors, and then it would perform the ranking of the stocks automatically, so saving you the effort of using Excel to perform a sorting of the Z score. All right, so what we are going to do is that we are going to shortlist perhaps just 8 stocks from this particular table, all right, before we move on to the qualitative component, and we will be rebalancing this strategy on an annual basis. So let's call this a Z-score strategy backtest, and let's run this. Running this will take a while because it has to perform the computation over the background. All right, so let's just wait for a while for the system to actually complete the run. Okay, so once the results are out, you would be able to compare the performance of a strategy relative to the STI ETF. All right, I'm actually going to just make a comparison with the STI baseline. So this way, you would be able to look at how this actually performs against a strategy that equally distributes the money across all 30 STI counters. Okay, and as you can see, there is a slight outperformance over the timeline with annualized return about 0.7% higher than the baseline. All right, but you're doing this with a higher downside risk, and we're also looking at a higher maximum drawdown. So as far as this strategy is concerned, it can potentially generate higher returns, but at a cost of a higher risk. Okay, and as you were to scroll down, you can vary the performance the timeline of this particular strategy, you can click 1 year and look at the results over a year. And as it turns out, for the past 1 year, this strategy would have been a lot better than the STI baseline. All right. And as you scroll down further, the program Pyinvesting would actually tell you that if you were to perform the investment right now, these are the stocks that would go into your portfolio. All right. You may ignore the column that talks about the portfolio composition. All right. You can basically take the list of these stocks and buy them in equal shares. Okay. Now, scrolling down further, you will be able to look at the evolution of your portfolio over time. All right, from 2008, and what would have happened to the different counters, because many years ago the fundamentals were different, and so the asset allocations would also be different. Okay, and so this next chart will show you the relative annualized returns compared to the risk of each individual counter. All these diagrams are extremely interesting and can teach you a thing or two from the strategy that you have chosen, all right, for yourself. All right, so this has been a demonstration of the pyinvesting.com tool to generate a multi-factor strategy. All right, and just remember that at the back end, we are using the Z scoring system that is taught by the ERM program. Thank you very much.